All right, let's jump into it. So, weekend analysis, that was fun. Did the whole sort of thing and realized that we had those sort of tech issues. So, it was no audio, but the notes were still there, the plan's still there. That's the whole sort of point. I do like to do these sort of things, and obviously, anybody could take something away from it, but main thing is obviously a chance to actually look at the sort of look at the directions and the flows. Still doing this one-handed, left-handed. So, again, you'd be surprised how quickly you sort of pick up using the mouse a little bit with your left hand. But again, it's only one hand, so it makes things a little bit difficult in that. But look, I'll start off with gold. We have so obviously seen quite a solid sort of push up this morning. So it was quite a good sort of trade for me. I actually sort of got out. Around that sort of 4,600 point, which was the initial sort of target that I was sort of looking at sort of coming into the weekend or sort of coming out of the weekend, over the weekend at that point, coming into the start of the week, let's say that. And obviously, so it ticked up here, 4,600 plus a few bucks, and where we get up to 4,620. So actually, so we shot a little bit more, but we are seeing it pull back a little bit now. We're about halfway through. Where are we at? It's 135 on the 31st of March. So last day of the month as well. So maybe we could potentially be getting some end of month flows happening with a few bits and pieces. We'll have to sort of wait and see. Um, but yeah, so I took out that sort of 46, and as you can see, it's sort of stalling here a little bit. Be interested to sort of see what happens if we do sort of obviously we're sort of coming back down to these previous highs through here now. Oops. Uh, Maybe I lied. Maybe I'm not as good as I thought I was with these things. But certainly these are the levels that we're kind of looking at here at the moment. Um, a break above 46.20 continuation. Realistically, look, you could have, say, body fills around sort of 46, 78 and that, but I wouldn't be surprised if we come up really sort of testing 4,700 should we hold. Now, it doesn't have to hold these things to the cent and that we could get a little bit of a dribble back down here, maybe mid 45, 50, 50s kind of level, about 30 bucks lower than where we are currently at 45.82. But should we, regardless of that, I mean, you got to sort of break these things down. This is where that structure always comes and plays out. That, we could just sort of say, okay, we've got our move up. That's leg one. We're now in leg two. We'll see where this sort of comes to. As I said, there's a small little level around there at 45.50. If the buyers step back in, if we have a sort of, and look, I think this is okay. Let me unpack this a little bit. That's the overall trade that we're kind of looking for. We're looking for now this pullback leg, and then we'll get that third leg to determine is this it, and we, excuse me, can sort of start to move back down towards low, 4,400, or do we get that continuation up towards 4,700? So I would sort of give this a little bit of sort of leeway. Like if we get a pullback to 45.70s, which we're pretty much there about now, 70.80 at that level here, and the buyers step in from here, then the likelihood that you get quite a strong continuation is obviously a little bit higher because you just got to think, what are the buyers doing? Are the buyers waiting? Are they sort of saying, hey, look, I'm in no rush. I can have it come down here, let the people take some profit before they step back in and run? Or are they sort of going, wow, no, look, okay, it's come back far enough now. Good, we got to get in. Boom, no, move nice and quick. So, for instance, you would sort of basically just on this one move from this sort of move down here, this sort of explosive move we had this morning, you put your fib over that level there, and you sort of say, are they coming in at 38%, which is obviously showing high demand for the price, and if that continues, sort of bounces off that 38%, which is like equivalent to these sort of previous resistance highs over here, and then they take out the highs, that's a strong continuation. If they sort of let it sort of come back down to 45.36, for instance, around that 61% into this kind of zone down here, it could still very much continue on and see an accelerated move to the top side. But it shows that they're willing to sort of wait a little bit more to have price to come down. People are happy to sort of sell and take their profit a little bit more. So basically, if you're getting a continuation from this 38%, what's really happening is high demand. People are jumping in and buying it. Plus, you've got a lack of supply, i.e., people taking profit. So if you run out of people to take profit, and then you've got people saying, "Hey, look, I'll buy it, I'll buy it, I'll buy," that's what you've got, that quick, fast continuation move. And that's why it's important to have a good understanding of at least sort of what this Fibonacci is actually telling you, where to anchor it, and what you're trying to actually pull out of it. Because, it doesn't need to be this grandiose sort of full move all the way through here. Certainly that can show you what's happening. But for instance, where we're looking at more sort of short-term timeframes, this is what we're interested in here. And as you can see, we're already starting to get a little bit of a pushback off the lows of this candle here. So I could see this potentially sort of moving towards sort of say 4,700 or so, and then sort of clawing its way back. It really, I mean, we had that incredible sort of sell-off, all the way, where were we? Where we sort of started there. So we came from 5,200. We lost like $1,000 or something. I think even more maybe actually. Yeah, so 52 down to the thing, so about $1,100 or so. So it's slowly grinding its way back. It doesn't mean that, okay, yes, we're going all the way back up to those highs, but we're not looking for that at the moment. What we're looking to see is, can it comfortably, securely break above 4,600? If it can, where are the sellers going to have another shot? Most likely 4,700 to 4,720. All right, let me get some notes done. Got that one. All right, moving on. Let's have a look at silver here. Silver obviously following suit with what we saw with sort of gold. So it's just showing basically it's a metals move. It's not like these things will always kind of run pretty much in tow. I think percentage wise, obviously, ooh, fuck, sorry, yawning. Jesus, not sleeping the best at the moment, but silver is obviously outperforming. It's up sort of 3.2% for the session against gold at 1.59, so 1.6%. Same sort of story though. We are sort of seeing it sort of hit into this sort of resistance level here at the moment. We're seeing a little bit of profit taking here. RSI, this is on the 1 hour, but the RSI is definitely in a position that says wants to go higher. We could certainly see this thing sort of maybe sort of consolidate a little bit around here, but I think sort of realistically, these are the kind of levels that we're looking at. Like if we drag this down here a little bit more, again, sort of my left-handed um, mouse work is not the best, but this could effectively still be the trade that we are looking for. And I think being on the short side, need to be wary of this. That a break high here could definitely see just another leg. Then we could see a bit more of a sustained, and by sustained, I kind of mean a little bit like for a couple of hours, pull back down here. But should this particular setup come, so we break a bit higher here, move towards, say, high 74s, take out the highs of these two rally points or thereabouts, you'd have some stops around here. If that then sort of pulls back, but we see buyers step in and we see this three-step move happening here, i.e., so move to 75, say a move back down to say mid 72s, and then takes out 75 again above that high, then I think that really opens the door up to sort of, as I said, around the 80s level. And, when you start to sort of look at these charts sort of side by side, and we could just see a second ago, gold's got potential to be moving up towards 4,700. You got to start to think, okay, is silver going to be, well, silver's not going to do opposite. Let's just say that. It's not going to do opposite. And you start to look at, okay, where would be its equivalent of that kind of stuff? And, that previous sort of level of sort of support resistance around $79 looks to be the sort of target there. Just have a quick look on 4 hour. Yeah, a little bit overbought on the RSI on the 4 hour, but again, these things can stay overbought for a while, so it doesn't really mean too much, but I think that's just something to be wary of, sort of with any sort of potential topside move here. Being overbought and also rolling down here a little bit does mean that, again, look, we could just start to see some sort of consolidation around this period over here, but certainly it looks to be a bit on the bid with the potential test of the neckline of this kind of, albeit a bit wonky, inverted head and shoulders, which, remember, gives the price target up around 80, 84. Now, these price targets aren't sort of like going to happen in 2 seconds, but should this play out, should price get up to that, that's the area you will look to expect to see some reaction from sellers there and profit takers as well. All right, moving on. So we'll obviously sort of do these notes with these analysis as well, but because I can't type, it's all done voice to text, so it may be a little bit wonky, but oh well, the general gist of it's there. Just before we do jump onto the dollar, have a quick look at the gold silver ratio, and I think this is a very important. But I mean, look, anybody that's trading metals, you need to be very aware of gold silver ratio. But this is what we sort of started to see a bit of the reversal, whenever it was a week or so ago from the large sell-off. But we've broken this channel, we've retested the underside, and now we're sort of starting to reject back down here a little bit more. And again, you start to put all these charts together. Look, this could definitely have a little bit of rally. Nothing's going in a straight line, we know that. But should this start to break back down towards, say, that 60-20 mark, then could definitely sort of see metals go towards those sort of higher levels, 4,700 and 4,700 and sort of $80 with silver. At the moment, that's a 4 hour. Look, it looks like it wants to sort of try and hold this, but again, we're getting those lower highs, lower lows after that backtest rejection here. It does look like it does want to come down a little bit lower, and of course, gold silver ratio lower is metals higher. So just something to be aware of. Move along. We'll have a quick look at the dollar. Dollar is really, I mean, it's getting there. It's getting its breakout. We've seen quite a sort of nice little bounce after that big last sort of sell down. But I'm still cautious about it. And if you look at this, actually, let's unpack it a bit more. That is a big engulfing 4 hour candle, and it's overbought. So, from a technical standpoint, yeah, you got your breakout. That's fine. Maybe we're going to be in line for a bigger back test down here. So something to say this effect come down here, find support, and then we move on with this. Because as you know, sort of like an engulfing candle is a big indicator of continuation of the direction of the engulfing candle. And look, it's a little bit sort of iffy because it's end of session, start of Asia, yada yada. But I think that certainly could set this on a little bit of a trend to sort of come back down and maybe sort of test around that sort of 90, call it 100, but high 99s. Jeez, I need to be able to sleep a bit more. Anyway, if we do get this sort of pullback down over here, you got to think what's the equivalent of that? Well, that's flows coming out of the dollar. Where are those flows going to go? Most likely they're going to go into metals. That's going to give us a bit more higher on the metals. It's also going to give us a bit of a push on the Aussie. I mean, if you're trading euro, all this kind of stuff as well. But it doesn't mean that the dollar's going to turn around. I think it's just done too much work to get here to fall over completely. But it's looking for 50 levels of confirmation before it goes. And as we know with these things, when they break out, they don't just break out once and backtest once. Sorry, you'll break out, backtest on a certain time frame, and then you'll do it on you'll get that bigger break there. Then you'll get that sort of higher time frame sort of break and backtest. So I can certainly see this sort of come down here, but should we see that move that we get sort of, because this is a very strong, nice close here, should we get that move to come back down to sort of 99.80s and the buyers step in and the shorts close, then we could definitely be seeing quite a substantial move on the dollar. And that'll be the time that we get the metals, I think, sort of really halt up a little bit. So short term, basically unpacked, I think we could see some flows coming out of the dollar here. We could see it going into the crosses, into the metals, but it doesn't mean that that's like game over for the dollar. I think that's only just going to be a temporary blip up. So short term, we could see a little bit of a push up in metals and push up in the crosses. But should we see that sort of back test hold and buyers step back in the dollar across the board, where are they going to get where are they going to get the flows from? Where are they going to get the power from? Well, it's going to come back out of the metals and it's going to come back out of those crosses. So I would be saying short-term upside for those crosses and metals, and then potentially get ready to look for some shorts, which goes in line with what I'm kind of sort of thinking with the Aussie. I would like to see the Aussie back up testing just above 70 cents. If we can get above 70 cents, I know Aussie's not part of the US dollar, but it's part of the it's a general consensus of the US dollar strength across the board, like a barometer. If we can get up around 70 cents, I think that's a good short side trade for Aussie, which would come in with a bit of weakness of the US dollar before it gets boom and then sort of powers on there again. Cool. All right. And finally, just with the Aussie here, and this is what I'm sort of talking about. This is the kind of trade that I'm looking for, that I'd like to sort of be a part of with the Aussie. Aussie's actually been very, very weak through this. I mean, look, Aussie is typically once it starts once it starts falling apart, it really just. But people don't want to know it. They've been buying it for so long, but they just don't want to know it at the moment. But as I said, just from a structural standpoint here, a bit of a back test against this sort of previous kind of support area would be nice, even if you wanted to get up around 70 cents, as I said over here, and sort of retest the underside of this medium term trend line. That'd be a good level, and that would come in line with a bit of US dollar weakness before we sort of sell back down, and then we target this main trend down here. Now, if we do get this push up here, obviously with a time sort of thing, it's going to obviously by the time it gets back to actually touching that trend line, we're going to be sort of seeing it at a bit of a higher level. So it makes the sort of price target potentially a little bit higher, but point is still the same. The price target's just basically targeting this main trend before we get a bit more of a substantial bounce. So it does look obviously very much on its knees. It's trying to hold here at the moment, but if we see a little bit of US dollar weakness and a bit of a push on the metals, that could be the time that people go, hey, maybe the dollar, Aussie's actually not too bad again. Push up here, but as I said, I think it'll only be a short-term position, a short-term trade to potentially get that to sort of then come down here. You don't break all these trends and horizontals, all that kind of stuff, to then just shoot back up and take out the highs. It can happen. Anything can happen, but it's not the sort of base case kind of thing. The base case here would be a back test of this area, another effort by the sellers. Again, it's that same three-leg structure. We're just in this first leg here at the moment. What we want to see is this second leg here to give us a better level to short from to make that trade there. So, we're really just extending out in the first leg. So we are going to get some sort of pushback. Is the pushback going to come from here? It looks like they're trying to hold it. It can always just dribble down further. But as I said, look, once they hate Aussie, they hate Aussie. But I would say most likely we're overbought. This is on the daily, oversold. You see a little bit of a bounce up until maybe the sort of mid to high 69-cent levels. Higher the better, before we sort of see a little bit of a stall of that move, and then a potential breakout with the dollar and Aussie come down and sort of target that rising trend line there. All right, so yeah, look, that's pretty much it from me. I don't think we have much data. I think we had a minutes or something out earlier, but yeah, where we at? So we should have ADP coming up, and I think we've got AFP this week as well, don't we? On the right thing here, 30. No. Here we go. So this is the week we're in here. Yeah. So we've got a couple of bits of data coming out. This we got jolts. We've got retail sales, ADP. ADP looking for a little bit of a tick down. Not a big mover necessarily, but it is. We're still getting delayed data. Jesus, with the retail sales. Anyway, slightly slower in ADP, though. Obviously, the bigger one is NFP, and NFP on Friday had an absolute shocker last month. So I would be surprised if this doesn't get revised quite substantially. And then they're looking back around 63. 63 seems to be about the norm at the moment. That sort of 50, 60,000 seems to be about the general sort of consensus for expectations, as you can see with the forecast here. It's nowhere near 130, negative 92. I mean, what the hell's going on with these numbers? But that seems to be about the general sort of consensus with it all, and that's fine. Look, all you need to do is sort of know where the market has been, where the market is expecting it to be, and where is it sort of like, the kind of the norm for the time. So if you've got a 63,000 when every other month was at, 300 or 400, well, 63 looks shocking. But if expectation and it's coming in around 50, 60,000 each month, and then it comes in at 60,000, it's going to be a fairly muted response because that's just what the new norm kind of sort of tends to be sort of with these things at the moment. And unemployment rate 4.4%. So I'm going to be a little bit sort of touch and go probably over the next week or so. I got get my surgery done on Thursday, and I think probably best to be lighter into the positions, not to have to sort of worry about any of that kind of stuff then. All right, that's it from me.